Everyone knows that taxes are complicated, but at the end of this video, you will, hopefully, have a much better idea of what types of taxes you will be paying through life, how and when, and then I'll tell you how I've been able to lower mine. Let's get started. First of all, what are taxes? Taxes are mandatory contributions collected by governments. Basically, it's the money you gotta pay in order to live somewhere. In my other video, the T word, the good, the bad, and the ugly, I mentioned that there are three main ways that us living in the US get taxed for, and that is on what we earn, on what we buy, and what we own. And if you haven't seen that video, I would highly recommend that you watch that first so that you understand some of the terminology I'll be using in this video. But before I dive deeper into how any of this tax stuff works, I just want to remind you that I am not an accountant or an attorney or a tax professional. So everything I will explain in this video is a very general idea of how taxes work. And if you want to learn from a tax professional, I recommend that you check out CPA and tax attorney Mark Kohler, because he is awesome. And most of what I know, I owe to him. So remember that there are also always exceptions to every rule. So don't take this video as financial advice, because it is not, okay?
And we have already established that.
Just making sure. Now, in this video, we'll only talk about the tax that you pay when you earn. First of all, when we make money, there are three main taxes that the vast majority of us have to pay. And that is federal income tax, FICA Social Security, and FICA Medicare. FICA stands for Federal Insurance Contributions Act. FICA Social Security serves as supplementary income when you retire, or it can be given to your family if you pass away. And FICA Medicare helps you pay for medical expenses after the age of 65, or possibly earlier if you have a disability. In most states, we also have to pay state income tax, but as of 2022, that is not the case in Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming. I live in Georgia, so I do have to pay state tax.
Yeah, that's a bummer, man.
Meh, it is what it is. But how is this all calculated? Well, let's start with federal income tax. First of all, the IRS needs to know whether you are married or single and how much you made the year that you're filing taxes for. And this includes wages, salaries, investments, and pretty much any other form of income that you had. This is because depending on your marital status and your earned income, you will fall under what they call tax brackets. And overall, the more money you make, the more tax you have to pay. Now, what makes these brackets complicated is that they are staggered. Meaning, let's suppose that you made $112,950 in 1 year.
Hallelujah!
I said that the more money you make, the more taxes you gotta pay, but okay, whatever. Well, if you are single for the tax year of 2022, you will first receive a standard deduction of $12,950, making your adjusted gross income, or the AGI, or your taxable income, $100,000. You could always itemize your deductions, meaning that you can claim like where your actual expenses are, but you should just do this if they do add up to more than $12,950. Otherwise, most of us just take the standard deduction. Now, if you made $100,000, this would put you in the 24% bracket. That does not mean that you will pay 24% of the $100,000, which is $24,000. Instead, we gotta do some math.
Brace yourself!
It's okay, I got you. The staggered structure works like this. You will have to pay 10% of your first $10,275, then 12% on the next $31,500, then 22% on the next $47,300, and then 24% on the income over $89,075, which in this case is $10,925. So in total, you would have to pay $17,835.50 of your $112,950 income. Make sense?
Yeah, kinda.
Great. Well, if it doesn't, feel free to pause the video and do the math yourself if you need to, okay? Now, on top of that, you also have to pay, as I mentioned, FICA Social Security and FICA Medicare. So you'd pay 6.2% on Social Security and 1.45% on Medicare. Now, this is calculated from your gross income of $112,950, not from your adjusted income of $100,000. So add another $8,640.68, which brings your tax up to $26,476.18.
Are we done yet?
Almost. If you live in a state that also collects state tax, like me, you will also have to pay state tax. If you were living in Georgia, for example, you would have to pay another 5.75% if you made more than $7,000. The state of Georgia, though, offers a standard deduction of $5,400 from your gross income if you're single, so your taxable income becomes $107,550 at a 5.75% tax rate. That gives us $6,184.13 in state tax, which brings your total tax payment to $32,660.31. This means that of the $112,950 that you earned that year, you actually got to keep approximately $80,290.
Oh, wow.
Yeah. But to lower the blow, you don't pay all 32,000 something dollars at the end of the year. You will pay it little by little with every paycheck. So instead of getting paid $9,412.50 every month, like you would if you were to get paid for the entire amount, you would probably be getting paid around $6,690 every month because the difference went to pay for your taxes in advance.
Thank you, I guess.
Meh. So how could you legally get around paying so much money on taxes? Well, if you recall the lecture, the T word, the good, the bad, and the ugly, I mentioned that this amount of taxes can be lowered by owning a business or becoming self-employed, because you will be able to write off or take deductions on a lot of the expenses that you would incur in running that business, making your adjusted gross income much lower. That is what I do because I am a business owner. We will talk about these more in depth in lesson 9 when we talk about entrepreneurship. But for now, if you want to learn more about this, I highly recommend that you check out Mark Kohler, CPA and tax attorney, because he has saved me and my husband thousands of dollars in taxes because of everything we've learned from him. I left you his YouTube link and a couple of his books under resources. And yes, they are affiliate links, of course. So check him out because you will learn a lot, I promise. As a reminder, in this video, we assume that you were employed by a company. And you may not know this, but every time you get your paycheck, it will most likely come with a pay stub. So in the next video, I will show you what your pay stub would probably look like and how to read it. I'll see you there. Okay, there we go. Wow, that leaves me always deaf. All right. Then I'll tell you how I've been able to lower mine, and let's get started. Let's take it back, please. Vaida, mira, Benjamin. Okay, who is a CPA and a tax attorney. Attorney? That's not a word. But before I dive deeper into how any of this tax stuff works, federal income tax, FICA Social Security, I think I said that wrong. Social Security? Social Security. Had a heck of a Puerto Rican moment right there. The staggered, then 22% on the next 47,000 something, I missed it. Go back. If you live in a state that also collects state tax, that's a lot of The state of Georgia offers a standard deduction of $5,000. No, don't stop me! I told you I was gonna do it twice. Oh. $7,000 and $10,000. Dude, you gotta take notes or something next time.
It's a lot of stuff.
I know. Take notes. Take it back. Because now you messed me up. I knew you were gonna correct me and I'm like, no!